Hey, what's up, everybody? Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist Podcast, where we feature questions from you, the YFP community, to be answered by one of YFP Planning's fee-only certified financial planners. Before we jump into today's question, I want to give a shout out to YFP Planning's incredible team that makes this segment possible. YFP Planning offers fee-only comprehensive financial planning services that are customized to the pharmacy professional. So whether you want to optimize your investing plan, pay off student loans, or simply build a solid financial plan, YFP Planning will help get your income working for you rather than the other way around. You can learn more by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from Nicole in Cincinnati, Ohio.
Hi there, this is Nicole from Cincinnati, Ohio. With everything nowadays being so automated, I was wondering if automated or computer-managed investments were better than an individual managing your account.
Thank you, Nicole, for submitting your question to be featured on this week's Ask a YFP CFP segment of the Your Financial Pharmacist Podcast. Tim Baker, it's been a while, episode 75, way back when we talked about DIY, robo, or hire a planner, when we talked about this topic. So what are your thoughts on this question?
Yeah, so the question, is it better than, managing your own account? And I would say yes and no. So it depends. I think it depends on what you're looking for, Nicole. So, is there a case to be made that, a computer will be better than a real person? Yes. And I think there's a lot of these questions are being asked across many industry. I think pharmacy included, when we talk about, dispensing of product, robots and algorithms and all that kind of stuff. It's shown that the less mistakes and that type of thing, and if in the investment world, there's a lot of emotion that's tied up with that and loss aversion. And if you strip away that human element, the flaws that we have, yeah, you could definitely say that it's something that is becoming commoditized over time. People are flawed, but I think it goes back to if you're looking for someone or something just to manage the portfolio and that's it. Yeah, I think that is definitely could be a superior to you doing it yourself, or even a professional that is managing money like YFP Planning, the CFPs that we have that manage our money. The way that a lot of robos charge is kind of a percent on assets, and it's not very dissimilar to what we charge to manage money. I think the big difference is what are you looking for from a service perspective? Mm-hmm. So a lot of these DIY solutions, whether it's for estate planning documents or managing an investment, a lot of these, there's nuance, right? Because life happens, we live in different states, we have different situations, and for a lot of the DIY solutions for our estate documents, a lot of the risk and liability is disclaimed away. So if you look at the fine print, it's we're not necessarily attorneys, and you're you don't feel very safe just in what you're buying into. At least I don't when I read that. And that's why I always kind of point clients in the direction of working with an actual estate attorney. And we can reference back to the people at Thoughtful Wills if you're in that realm right now. For investments, again, a lot of things that are intertwined with investments are taxes. And as typically as your career investment portfolio grows and changes, so do the complexities. And typically, and this happens with advisors too. We're a little bit different at YFP Planning because we do taxes as well. But most of those DIY solutions, most even advisors will say, "Hey, talk to your tax advisor for this or this related to your investments," and they kind of dust their hands off and say, "Hey, not my problem." And in my experience, I think because they are so intertwined, and really the two of the main drivers of your ability to build wealth over time is efficient investment and tax strategies, is having that under one roof and being able to talk to a person and say what's going on here. So I think that there is a place for robots and computer managed investments. Absolutely, especially if you're in kind of touch it, not necessarily worried about tax efficiency and things like that. But if you're looking for a higher level of service where you can actually talk to a human being and talk through issues, then I would say no, and not necessarily and I think that you can probably combine those two things. To be honest, there's a lot of planners out there that don't manage money or more of an hourly thing but I think there's downsides to that because you're not necessarily building a relationship. It's very transactional in nature. And again, that's not something that I think is conducive to building out an efficient, comprehensive financial plan. So I'm not necessarily, down on robos or anything like that. It just comes back to like, what are you looking for and what type of problems are you trying to solve?
Yeah, and Tim, I think your comment right there, comprehensive financial planning and investment management are not the same thing.
Not the same.
So
Yeah.
I think you highlighted that well, that for folks that are, just looking at the investment piece of the puzzle, as you say often, as the planning team does a great job of really helping folks work through. Investing is an important part, but one part of the financial plan. And often how we approach the investments in that part of the plan is going to be dependent upon other things that are happening in the plan. So I think very much, apples and oranges. And I like the suggestion that there's perhaps, a value for both, depending on one's both interests, goals, and so on. So great stuff, Tim and Nicole. Again, appreciate you sending the question. I'd point folks back as well, as I mentioned earlier, episode 75, as a part of our Introduction to Investing series on the YFP podcast. We had an episode titled DIY Robo or Hire a Planner, and we'll link to that in the show notes. Thanks again for listening to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist podcast. If we feature your question on the show, we'll send you a super comfy YFP t-shirt. You can submit your question by sending an email to info@yourfinancialpharmacist.com, or you can record your question by visiting yourfinancialpharmacist.com/askyfp. If you don't feel comfortable sharing your name on the show, you can send or record your question anonymously. As we conclude this week's Ask a YFP CFP episode, an important reminder that the content in this podcast is provided to you for your informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with a financial advisor with respect to any investment. Furthermore, the information contained in our archived newsletters, blog posts, and podcasts is not updated and may not be accurate at the time you listen to it on this show. Opinions and analyses expressed herein are solely those of Your Financial Pharmacist, unless otherwise noted, and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com/disclaimer. Thank you for your support of the podcast and have a great rest of your week.